Okay. But they don't fit over my Scully. So I'm really like, I don't want to grab them right now. So let me take a look because if it sets back up on this, so look at this structure. Yeah, look at this structure. Look at how the market came up here, topped out at about 90, right? Major psychological price level. Put a level there. Actually, I want to use this one to be cute. So here it topped out at about $90,000. Okay. And then it took a second attempt at that $90,000 mark. All right. Which was Tuesday. And then gave us a, what do you call this, a morning star, evening star pattern. And shoom, went above that. Today, it hit about 93,343. So they're saying that it's going to hit 100,000. What do we think about that? Perhaps it might. It might. It might not. Who knows? Might not. Who knows? Might not. Who knows? I want to make sure. Let me see something here. Popping collars. Yeah. Want to make sure that we have everything up and running. So is the sound okay? So I need somebody to tap into the chat and tell me if the sound is okay. Because it looks like it's coming through okay, no problem. But then my computer might be sounding like it's gonna take off. Let me see something real quick. Yes. Yeah, it sounds like it's gonna take off. So I'm gonna grab my headphones and then I'll be right back. So let's take a quick commercial. Let's take a quick commercial and I will be right back, friends. So this whole time, okay, let me make sure. All right, we're back. So you've never seen a hat as funky as mine. Why does it look like my head is weird? And yes, I could take it off, but I don't want to. It's getting chilly here, man. I like winter, but it's like, yo, why do we need winter right away? Do we need winter now? We don't need winter now. Let's put a pause. Let's put a pause on winter. Let's bring back the summertime. So boom, look at Bitcoin. Out because I started I was mentioning that I was at my charts around this time when it hit 93,000. And on another chart, I had a alert set up at I think it was set up at like 91 or something like that. 91 and some change, maybe 91.9. Don't recall, but I was like, yo, I don't want to see it go below 92 because this is where we got in. So we got in at 89 and some change. And as far as like profit on the day, I didn't want to see it fall below 92. And so that would have been like here. So that was a solid trading idea. I still think that it wants to go higher, and then not to mention, like this is a new level of so was resistance here, it was resistance here again, and then broke through. And so even though it did technically close below 90,000, not quite convinced that it's going to completely reverse. Okay. So let me give you some jams. I'm gonna give me some some classical music going while we're hanging out, chatting, looking at charts. Thank you guys for joining on. We're live on TikTok as well. Actually, I don't want the live to get taken down. Okay. Oh, we ran close there. So the the market is getting ready to reset here in about a little bit, but this is where we are with Bitcoin currently. It's breaking back below 90,000, which was a day. We liked it. I'm not mad at that. But this is to me, I don't believe that this is going to sustain being below this level. I think this is just people that are either taking profits or they are buoying up to take this bad boy higher. My opinion. Okay. Okay. So looking at the psychological price levels, that's what I pay attention to. And even though right now it's pulling back hard, body to body, skin to skin. Mhm. Yeah. Interesting, huh? Yeah, it could pull back some more, but and I wasn't interested in getting into a sell. I know some people have a philosophy like, oh, well, if the perfect time to get out of a buy is the perfect time to get into a sell or whatever, but I I have evolved in my bias. I think a couple months ago I was talking about it going down, and it did go down. It did go down. It did go down, but now it's definitely it made an all new all-time high of all the times. So really, what I would be doing is take higher time frames so we can really plan out what we're gonna do with this trade because this is new territory. However, we know if you've been watching Bitcoin with me on this channel, it was struggling around this 72,500 level. It was really struggling. It was struggling. It couldn't break it until finally, shoom shoom, it broke it. So let me put this on here because I want to highlight that. The get that going. Okay. So yeah, I mean it was struggling around this level. Okay. This area over here. use this area over here. Look at that. It's kind of interesting how this matches up with this last or this previous week's bullish candle. Let's see here. Yeah. Look at these. Look at these swings, yeah. I'm gonna go out to the monthly chart just to get a better look at this because it's very interesting. Look at that. Quiet, 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 and then shoom and shoom. So it had like a double tap here off at 13. Um, went up substantially, and look, it came all the way back down. Ugh. So I'm not quite convinced that it quote unquote wants to go down just yet, because it looks like, and it might pull back some. You know what I mean? I'm not saying that it won't pull back to. It could pull back to the 72.5 area before going higher. But yeah, I mean, right now it's at 88,006 the other week, and I think not that one, not that one. Let's go throwback. Let's go throwback. More further back than that. Let's go back some more. I think I was looking at yeah, Bitcoin bloodbath. So I think they took that one down. Maybe this one got yeah, this was violation. Anyway, yeah, this was at 72. Let me go back because that's not the one I really wanted. Let's look at some throwback ideas real quick. Where is it? Yeah, that's Bitcoin. Bitcoin, where are you? Oh, let's look at this. 2022. Can you imagine? 20,000. Sheesh. It was at 20,000. This was 2 years ago. Man, time flies when you're trading fun. You're having fun trading. Oh, gold is really. Let's take this off. So this is like it's coming into a previous level here. So it was supported here before it went up and bounced off of this. So I mean, you could sell it. It might break this, obviously, but let me just uh, let's see here. Hmm. It's a projection brick. Yeah, so this is a level as well, right? So we had a little bit of the market, which we could see that on the candlesticks. The market used this level as support before, and so it went above it today and then turned around. So it could possibly continue down a little bit more to grab some more help to go higher. Who knows? Or it could also just completely turn around at this level, right? Because it came up, went sideways, and then went up, right? So it could be wanting to go up from here, wanting to block that off, something like that. So it could use this area here, and same with silver. So silver, you could tell is just at this $30 and 50 cent mark, basically. Yeah, 30.35. So 30.25, $30.25. Psychological price level. Is it gonna hold? Hmm. Who knows? I like to use 0.25. So this is an important level for silver. This is a game-changing level for silver. Okay, game-changing level. This, if this is solid, then that's okay. But typically, yeah, we'll have to see. So you wouldn't want to get back in or do anything until it gets to the 75, $30.75 level. If it wants to go higher, it would need to go above that. Let me just switch to 30.75. It's already kind of showing like, oh, that it went up there today and then it turned around. That's weird. I hate that. Like oil. Yeah, oil. Let me look at the weekly chart on oil because I was looking at that on Sunday. Let me move this out of the way because she is in the way and I'm not able to see what I need to see. So look at how it's stacking up on this level right here, this wick right here. Um, I'm not interested in selling into a support. You know what I mean? Especially when it's that close. Let me see, 67. Let's see, $67. $67 a barrel. $67 a barrel. Maybe 68 bucks a barrel. Who knows? 68 bucks a barrel. Oh, it's a powerful area. You know what I mean? You know what I mean? Gonna happen there, bud. Let's see what the ATR is on this guy. Oh, 5.5. Oh, interesting. I'm not gonna use that, but it could be. Could be something to use. No, that's too wide. Let's see what 2.5. Let's look at that because 25 cents is too small. Oh, hold up, maybe it could. It could. But see, so here's the problem is that there is this it's some levels in here. It could go down a couple dollars. Yeah, I see that. I can see that now. But it could also go up. Like $67.50 is looking really interesting. 67.50 is looking very interesting. Very interesting. Now, what we would love, oh my goodness, you want to know what the gameplay would be? What we would love, and it might take a day. Hold on, let me see what these are. October 29th. Oh, so these are really large bricks. Let's try 1.25. Okay. Okay. Hmm. You see how this double tapped off, or double tapped? I said double topped. Double tapped off of this 67.50. I wonder what this is. So this is today, 11th, 4th, 31st, 9th. Okay. Yeah, that's pretty good. So I like 1.25 on oil. Let me just try one just in case. Oh, interesting. So this is today. Okay. Stronger than pride. So 69. And that could be a lot for people to give up. Some people might be like, I'm not waiting until they get all the way up there. Well, that's fine. You don't have to. 69. So basically, let's look at this way. When it got above 69 over here, it went up to almost 79, 76 and some 77 basically. When it turned around at 69 over here, let's bring it down a little bit. It went up to 74.8 technically, and then pulled back and then went all the way up to 85, 86. When it tapped off of it here, went up to what's that? 83 basically. Did a triple bottom. Went all the way up to 92. Very interesting. That's just an indecision candle right now, so no dice, no tea. No dice, no tea. Oh, that was looking like a setup earlier. It's not looking like one right now. very ugly. Hmm. So GBP must, no, it's still pretty much in the same area. We'll get to it in a second. Hmm. What do we think about this? Do we think this is going up higher or going down? Think that's going up higher or going back down? What do you? I'm gonna trade this earlier because I saw this look like a W on the daily, but then I'm gonna show you why I didn't trade it, and I could be kicking myself in the butt tomorrow. But right now, when I had my moving averages on there, it was like right at the moving averages, and I just wasn't feeling that. Yeah, I mean, I just wasn't really feeling that. I didn't want that to. I was like, ugh, why is it so close? Why is it so close to the moving averages? We don't like that. We don't like that. And turn them back off. Sometimes the moving averages are helpful, and then sometimes they might cause you to miss out on a good trade. You know what I mean? Because if you're too caught up, like, oh, I don't want to do this based on the moving averages, it could make you miss out on a decent trade. So JPY off this watch list. It's just blah, sucks. This is slow. It's just going sideways for years, and I didn't like it. Not literally years, but maybe like months. I didn't really like it. Slow moving pair, yawn. We already got enough slow moving pairs in Forex. Let me change my music because I don't want to hear this song. Let's hear something else. Eh, this. Okay, so Euro NZD popped up here. It's kind of like a yeah. Not really seeing. I like my price action patterns to literally jump out at me. Now, this one I'm not opposed to. I'm not opposed to this. There's a technical, like I don't mind this. It's not a traditional pattern for as far as W patterns that I like because look at that, that's weird. But yeah, this is really funky. The only thing that I do like about this is this is a good bullish indicator. Let's see what's going on with the MAs. Okay, so it's closing back above the 8 exponential and the okay. So it's pulling the 8 exponential back above on the 4 hour. It's already above the exponential. And then let me do this. Let me do this one. So it's breaking above the 200 on the 1 hour. Um, using the 200 as support on the 4 hour. Interesting. And okay. Yeah, it might be something. I'm gonna do a little bit of more diving in on that because it could be an opportunity for Thursday. Let's say if I wanted to sell this. Let me look at the weekly. Then okay, so if I, and this is where sheesh is at the tip of my tongue. It'll come to me in a second. I've been studying philosophy a lot, listening to lectures or talks by Karl Popper, and yeah, it's just testing the ideas out as far as from the other side, like really having a contrarian type of approach to trading. Thinking that it's like, let's just say, for instance, I show up and I'm super convinced that the market is going to go higher, right? I'm super convinced. I'm like, oh, no, it's going higher. Is this clock? Yeah, okay, that's right. I'm like, oh, it's going higher, it's going higher, it's going higher. That could be, and it could absolutely go higher. But I need to test out why it would go lower, right? What are the reasons as to why it would go lower and be able to be comfortable with letting go of my bias. So let's say for instance I'm like, oh, this is totally going up. Second time on the daily chart, it's done like a weird candle, da 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 da. It's at a psychological price level. I'm certain it's going up. But what reason does it need to go down? Is there anything at all? And if so, what does that look like? What does that mean? Right? So this is the 0.015. Let's just keep that in mind. 0.015. Ooh, my the Rinko is looking pretty good. Um, this would technically be considered like a pullback brick, and then a continuation could be interesting here. Long position. And I think that's what Rinko helps me to look at is just like both sides of it. They would need to figure out what's going to happen here, and then it could potentially, let's just see if there's any other levels. So basically here first, which is not a tremendous or beautiful. I mean, obviously it could go there, but that would be after crossing over this bad boy. So really, the next level up, technically, if it breaks through, is like this level right here, which would mean that we have like a 1-to-1 if we risk 2 bricks. If we risk, technically, um, well, technically that was risking 3 bricks, I'll say it that way. But so if we risk 2 bricks, meaning we get in here and it reverses 1 brick and then reverses another brick, that would be 2. And then the next level up, is that worth it? Yeah, right? Or we could say, I want to really tighten my risk and risk only 1 brick. Let's see. And do something like that. Um, right? So that could be that. But that's a really short move. On the candlestick chart, that is the most direct level where the market went up and came down, right? Here, see? Now, if it fills this wick, obviously that would be nice. But this is the most direct level of resistance, right? So even if it comes up here, it's like a 1-to-5 if you risk 1 brick. So that's one way, right? So we said, okay, well, boom. If it goes up, that could be an idea. Okay. Now, what it could do, what it could certainly do, is come in here to this level, right? Like come all the way up here. So this is really a crucial level because it could use this area and break above and go higher, or it could use this level to as like tapping off of this level to turn around. Crucial level. So what I would be looking at is, let's just do something like this. Whoa. So like, let's say for instance on the 4 hour, maybe the 1 hour, depending on. I need to double check. I haven't traded GBP AUD in a while, but you can see how over here at this level hung around, gap down from this level, and so now it's like, is it going to stay above the 200? And if so, what's going to be the response to this level? What is going to be the response? So something to watch, something to pay attention to. But again, if that was a move, then it would be something like that. And it could potentially go higher. Like the only thing I always say is we're not really interested in knowing, oh, this is a 1-to-7 or 1-to-5. It's like, okay, what am I willing to risk on the trade, right? Reverse engineering it. What are we willing to risk on the trade? That's where we are. That is where we are. Let me see something. Okay, let's see. Okay, let me see. Okay, so we're back on it. So now GBP CAD, GBP Canadian dollar. No direct. And that could completely fall. Oh, GBP NZD, what are you doing here, friend? What do we think about that? Do we think that's going higher? Hmm. Hmm. Interesting. I don't like it. I mean, it's not my favorite. It could certainly go up. Just because it's not my favorite doesn't mean I won't trade it. But I'm just kind of looking. So GBP USD, you see this level right in here is so. Now it did just break below the 200 on the daily aggressively, but then it is pulling off of this level here. So who knows? I always say like I'm not pressuring myself to know what is what. You know what I mean? Like I'm not pressuring myself to say, well, which way is the market going? I'm just saying which like I'm asking the market which way do you want to go? Because I can guess all day long and be right, or I can guess and be wrong. Okay. GBP, JPY, nothing. That's why I took off NZD JPY because I was like, this is ugly, it's boring. This could certainly go up higher. I like a little dub dub, like a little dub dub, and it could smash too. I mean, it's really been going sideways. It could smash. Look at that. It could really go higher. Because where is the next level of resistance? Right up in here. 200. Looks like about 200, 200 to 201. Let me move this down so we can use that. Because, hmm. And what does that look like on the daily? Very interesting. So it swung lower today than yesterday. Interesting. Like, notice this big bearish candle. Well, comparing to the last 3 days. And then this day. And then this little punk candle. And then this day. And then is it closing back above the gap here? So it closed below the gap 1, 2, 3, 4 days. And then it's closed above the gap 1, 2, 3, technically 4, 5, 6 days. Uh-oh. It's a battle. Who's gonna win it? It's a battle. It's a battle. One sec. We'll take a quick commercial. Okay, we're back. I just got a little bit of time. Yeah, yeah, yeah. Okay, let me see something here. Mhm. Yeah, so we're just doing a little bit of. Okay, no, that's ugly. Okay, okay. I just wanted to take a look at a couple different things and get. Let's see. Okay. I was sending some emails real quick. Is So where were we? We left off with taking a look at some charts. So GBP JPY might be the move for tomorrow. It might be. Um, it'd be a quick trade because unless it just blows through this level, um, be an interesting little W pattern. W, cute little W. And this is just disrespectful. Like I know people that were, if they were selling this, they probably were thinking, "Oh snap!" And then it's like, "Shoom, psych." NZD USD, similar, similar to GBP USD, where it's reaching a level of support. Solana, I bought some Solana last week. Definitely want to see. Is it gonna hold at this level? Let me just see what's going on. Hmm. This is the USD Canadian dollar. Very interesting. Interesting, interesting. So this was a USD JPY trade. It's like slow cakes. Like you have, so this was October the 23rd. So basically 2 weeks. This is what causes trader fatigue, like straight up. It's like, oh my goodness, could you just hit the target already? Not being ungrateful, but sheesh. USDs are, let's see something real quick here. US is obviously approaching a level of resistance. I would say we have a bit of a level here. I want to get a little bit loosey. Let's see. Maybe, maybe we'll put it there. I'm gonna do a little bit more diving on that one, but so let's just say put that 1824. Interesting. Breaking into this new 18. I think I took the psychological price levels off of this one for some reason. Let me just put those back on there real quick. At 19. This we would put at $18.25. Then we put the copy that one. 1850. Then so it's literally at a psychological price level, and then 1875. 1875. So we had a little bit of let me put we'll just put the other ones up down here below these since it was 1775 to show you where it came from. 1775 and then broke through to 18, which it did retest 18 today. So it might be done with 18. Peaked a little bit above 25, but nothing significant there. But definitely that just looking for some sort of pullback action. So that's that on that. It's not really much that's popping off on that. Just and we're back at 89 on or 90. We're just waiting on it to see if it's going to go back above 90. Which chart was it that we had the other? Was it this? I guess we took it off. Oh, it was this one. Good. So yeah, we were saying how on the 1 hour, when you look at this, it finally broke 90,000, right? It tapped it here, tapped it again, came back to it and broke through. And then now it went all the way up to 93,000 and some change and turned around and yeah. So had it's been making some strides. I was gonna say I know the 15-minute chart was doing some stuff because look at that drop. That Like, why did it stop here? These are the questions that I'm asking. Like, why did it stop right here? What was it about this? Why did it stop here? Why did it stop here? Why did it come back here twice? So, definitely didn't like this area. And this is more like you see, this is a little bit of a demand area. It was going sideways. This is a 15-minute chart. Yep. Yeah. 345. Let's just pay attention and see what happens. I'm going to turn the mic off and then we'll pay attention and see what happens for the next couple minutes here. Okay, so thank you for taking the time to watch this video. We will be discussing simplifying candlestick analysis, psychology. And the first part of this video will be looking at the whiteboard, giving you a bit of a background on the simplified candlestick psychology piece. And then we will head back over to TradingView in the second part of this training so that we can discuss practical application. So this will be a two-part tutorial just to give you a heads up. This whiteboard was a little bit too large to bring into the TradingView platform. All right, so on your screen, we're going to go over the information so that you can start to use simplified candlestick psychology to your advantage. One of the things I like to explain is the market and about what the market's intentions are, the better we're able to be in the right place or the right trade at the right time. And if you were to equate the market with reading, okay, so maybe our monthly chart would be reading an entire book, and our weekly chart would be reading a chapter, and our daily chart could be reading a paragraph, and maybe 4 hours a sentence, and so on and so forth. Having a deeper level understanding of candlestick psychology is that the market does leave clues. One of my favorite quotes is success leaves clues, and that is also true in the market. We're looking to hop on the coattails of the market makers, the big money. And so the better that we can understand the clues that they're leaving us on the screen, the what the market is going to do. And so one of the things that we're asking ourselves is who is in charge? When we come to a chart, we're asking ourselves, are the bears in charge or are the bulls in charge, right? So are the bears in charge? Are the bulls in charge? And just really quick, if candlestick psychology is brand new or you're brand new to trading and you're watching this video, a bullish candle is a candle that had a lower open, higher open, and a lower close. And when we switch back to trading view, this will make a lot of sense because you'll be able to see the candlesticks. So we're asking ourselves when we come to the market, come to the chart, who is in charge? And I do believe that there are certain objectives that we go through from the process of transforming from a novice trader to a professional trader experience. And then we go into being what I like to call a advanced beginner, where we can earn money consistently from the market. And our competency shows when we're able to maximize our return on investment. Or let's just say, for instance, you're doing a prop firm challenge and the target is 10% per month. And now that you've done that consistently for, let's just say, a year, now your next goal is to say, well, I'm going to increase that to 15% per month. And so, as a competent trader, you're looking for ways to maximize your return on your investment, or AKA your ROI. As a proficient trader, you're trading your own beliefs. Okay. So, you're able to come to the market and trade what you know to be true about what you see. Okay. And finally, at an expert or professional trader level, you're able to trade your states of mind. One of the things that I like to incorporate in my day to day is listening to binaural beats because it does allow me to. In fact, right now I have some on in the background just to calm the mind, right? Meditation is one of the other things that I like to incorporate in my day to day. So the goal is to start reading the market itself versus other people's opinions, right? And then also to release the idea that we control the market. It's choosing to follow the movement of market makers and knowing what the market movers are doing. There is a tremendous amount of information that exists in just the open, the high, the low, and the close of a candle. And so the better that we're able to understand the relationship between the open and the close when compared to the high and the low, that's going to give us the ultimate key to positioning ourselves to be profitable in our trading. And so just to break down the anatomy, your open, depending on the direction of the candle, we were making the point that if this was a bearish candle, then your open would be, let me get my drawing tools here. Okay. So the open would be here and your close would be here. Okay. Now, the high of the candle and the low of the candle, those positions don't change whether you're looking at a bearish or a bullish candle. Okay. So open, close, high, low. This is just a basic anatomy. And I know that sometimes it seems like, oh, well, I know all this stuff. This is basic. But sometimes just sticking to the basics is it helps you to create a simple approach to the market. So, opposite of that, if we're looking at a candle that was going up, I know this arrow is pointing down, but let's just say we had a bullish candle. Your open, of course, would be here, your close would be here, and no different position on the high of the candle and the low of that candle. Okay. So, all of those are still consistent. Now, one of the most convenient approaches to understanding what the market is doing is this rule of thirds. I like to divide my candlesticks into third. Okay, so anytime you see a candle, I've hacked my Fibonacci on TradingView. I'll show that to you in just a second. But I just take a third of the candle, and that's where we are getting these numbers from. Okay, so when we go through the the first number that you see here is going to be the open, and then the second number that you see is the close. Now let's start with drifters, because in a bearish market, or if the market is going down, what we tend to see is a candle, and this is already set up pretty nicely to illustrate this point. But a 1-3 candle would mean that it opened in the higher one third of that candle and closed in the lower third. And so, with that would mean that the sellers were in charge through the entire session. It doesn't matter if that's a 4 hour or a weekly. That means that they were in charge through the entire session. Now, let's look at the second option here. So, if it opened in the second third, okay, closed in the lower third. So what that's telling us is that the sellers were in charge at the reverse from where it opened and closed bearish. And so the bears got in control of that candle towards the end of the session. Now, if we have a 1-2 candle, what that would look like is our market opened in the upper third and it closed in the lower third, which signifies no real certainty of who was in control or who dominated that session. All right. Let's move on to our climber bars. And remember that this candle here is going the opposite direction. So let's keep that in mind. So with our, let me get this duplicated, and then we can make the illustration here. Oh, oh, my bad. It doesn't, did I had the wrong button on that. Give me 1 second. Let me push that down. It doesn't, let's delete it and then I'll move it. Okay, so copy, and paste. Okay. So with our bullish candle or our climber candles, with the direction of the open, that 3-1 candle means that the market opened in the lower third. Long bullish day. The buyers are heavily in charge, and if we are in a trending or a market that's trending higher, then that could be considered a trend day. The second candle example is the 2-1 candle, where the market opened in the second quadrant of the thirds here and closed in that upper third. And what that means, this similar to the 2-3 candle, is where at the end of this session the bulls took back over, because it would have had to come down here and then reverse past the open and then close higher. So the bulls took over that session towards the end. And then finally, with the climber candles, a 3-2 candle means that the market opened in that lower third and it closed in the second second quadrant or second third of the candlestick. So that, of course, is a struggle in power, no real direction as far as who is in charge. Now, when it comes to our extreme candles, some of these are what we would consider to be dojis or some of the other names we could use. But really, the point of this video is to give you the psychology behind who is in charge. And so, just looking at the 1-1 bar, let's just say, for instance, we had in the upper third and it also closed in that upper third. Depending on where you are as far as market structure goes, that is showing that the buyers are in charge. Okay, so if it we have that extreme situation, that 1-1 bar, it closed in the top third, buyers are in charge. Now, alternatively, and I'm going over the skipping over that second one, but let's say we had and it also closed in that lower third. All right, so that it is an extreme bar as well, signifying that the sellers are in charge. All right. And so finally, with this particular example, if we had a bar that opened in the um, second quadrant of the third, closed in that same area, we would, in this, some people call it like a spinning top, but it definitely a struggle in power. So that would complete part one of this training video. I hope that you got tremendous value from this. Be sure to leave me a comment. I mean, what are your thoughts on candlesticks? Do you find yourself looking at certain candlesticks and looking at the names of them over really understanding what the psychology is? I definitely want to hear from you. I want to hear your thoughts, and hopefully you'll stick around and watch the second part of this training so that we can put it all together on the actual chart. So feel free to follow me on here and boost the idea if you found value, and we'll catch you in the next training video. Okay, so welcome to part two of the Simplified Candlestick Psychology tutorial. Now, if you haven't had an opportunity to watch part one, we do go over the basics on what we're going to be expanding on in this particular tutorial. So we talked a little bit about drifters, which are bearish candles. We talked about climbers, which are bullish candles, and then we talked about the extreme candles. Now, I mentioned in the last video that I hacked my Fibonacci, and I'm sure there's probably and I'm just going to pull it out like this so you can see. I'm sure there's an indicator that supports the power of thirds. There are so many indicators available in the TradingView platform. But just to show you really quick, super easy. I just took out the levels that were not relevant to using it in the power of thirds. So I have 0, 0.33, 0.66, and zero point 0.1. And so what that does is it allows the candle, no matter where I pull and transform these lines, to show me the upper third, the middle third, and the lower third. And so the point that I want to make with this, and we're looking for the market to tell us which direction it wants to go in. I'm just going to delete that for now. And so let's say we ended up on this. Let's give us a little bit of, okay, so we ended up, is it, okay, so yes, we are on the weekly chart. And okay, that is fantastic. And let's just say we took, so this stick formations, the double top, double bottom. And so let's just say now that we've seen that play out and we're looking at the previous week. Now, keep in mind this week has already started, but we're looking at the previous week's candle and we're going to use the three, the power of the thirds to determine, okay, so now we've already gotten into the upper third candle that we would have measured this on. And so let's say we were to head over to our daily chart. And even though a day like this, like look at how the market came all the way down a little bit below the lower third and probably convinced some people that it was going to sell and then completely turned around. And so now we have a candle, and I don't want it to get too cluttered, but let me just put these levels on. The levels that I'm putting on are going to signify the week before and how that week was the weekly candle was broken into thirds. But on this current candle, we have a candle that opened in basically it opened very, very close to that lower third, but it opened in the second portion and it closed in a candle like this signifies that the bulls took over the market during that session towards the end. Because at one point, this candle would have been all the way down here, which would have been a bearish candle, and now the market reversed completely and it closed in a bullish fashion. And so let's just say, okay, we see what we need to see, so we're going to buy here. All right. Note the upper third. So let's just see what happens. And then the other thing is when we look at the market structure here, there is a bit of resistance. The market was supported briefly here and then had the shift in the candle. So this could be a level that we're targeting. Also here, the market bounced up, okay, and then turned around. And so these levels are pretty close in here, but we'll just split the difference would be in this area. Okay. So if the market does go all the way up there, we're going to see what happens. But let's just hit play. So we got our order in there. Okay. So we're up. Okay, so let me just pause, make sure we're okay. So now we are in this first level of resistance. So let's just say what happens. Okay, so now the market closed above that first level of resistance, which is an indication. So if we got in down here, comfortable with holding it to see if it's going to hit our second target. So let's take a look. Okay, so closed here, but look at how this did not close very bullish day. And to have that market, even the wick of it, be lower than these wicks over here, that may signify a reason to close. So let's just say we close that because these levels in here, like this is technically supported and resistance, or support and resistance here. So let's just say we close there and then let's see what happens after this. Ooh, okay. So the market came up to that other level of resistance and then completely peeled off and came back down quite aggressively. And so let me see, is this a new week? Okay, so that's Monday, Tuesday. Okay, and so at this point, I mean, what we would have done based on the original move is we would have come in and reassessed on the new weekly candle, and the levels would look like this. Okay, and then of course we had our target levels in there. So I don't want to confuse you, but these levels, as far as the upper portion of this box. Okay, and I'm just going to delete that one. It's just because we can delete that. So these are the levels based on that prior week. Because these, so again, when you're doing this on your own, of course, these two candles represented that new week. So even if we were to go back, let's just say we went back to this. We'll go back to this day. Okay, so this is what I'm showing. So basically on your weekly candle, this is cutting that into a third. Okay. And so when the daily chart is showing the steps here, so we had a little bit of a level here, the market broke through that. And then this was the next level up, which I believe based on what we just saw, the market came up to this level. Okay. And so now the market came back into this third here. So we would want that third, right? It came all the way from the previous week and it already ran up to this level of resistance. And this would have been the next level up, but we could see where it was resisted here, also here. The market fell and came back and was retested. So, yeah, I mean, this is something that you can use to better the conversation. This candle this week was in the lower third, it opened here, and then that way you're able to really identify the opportunities based on the bigger picture. Now, sometimes you can, if you feel comfortable, of course, you can. The good thing about candlestick psychology is that it applies on any time frame, right? And so even if, let's just say, for instance, this is September, this is let me close that out. So we have our um, October candle here, right? This is our October candle. I didn't click it. Okay, and so we cut our October candle into a third, and we see where it opened and closed right on that third, the lower third, right? And so very interesting to see how the market will test these levels. In fact, if you wanted to put a level here and just a level here to sort of box off a zone, now we can go back to the daily chart and see what happens, right? So the market could very well justify a sell in this area only to be restricted here and then potentially turn around. So that's something to pay attention to. Some of the information that we went over in this video was a little bit foreign. I would encourage you to go back and watch part one of the video because it does give you the basics of the drifter candles, the climbers, and what that looks like in a simplified format. And feel free to leave your comments. I know one of my favorite candlestick patterns is the engulfing candle, and we talked about how there was a such thing as the fake engulfing, or depending on where the engulfing direction, it could just be that the market is blowing off steam. Okay, so definitely would want to hear from you. Be sure to boost the idea if you found value, and feel free to share it with your friends on X. And until the next time, take care. I've recently been rereading Trader Mind by Steve Ward. And I also wanted to just talk through a couple things that I saw here on this chart as far as supply and demand goes. So on the daily chart, this is GBP USD, the FXCM version. I saw this level of demand from whence the market came down here and it went sideways and then it popped out of this level. And so yesterday, as a result of the presidential election, the market went all the way down here and touched into this area. And normally, what some people might look at when they see a chart like this is, oh, is that an engulfing candle? And it looks like it is. One of the things that I have this term called fake engulfing, where I will go through and maybe we can go back and look at some examples. But a fake engulfing candle is a candle like that, like where it's the market isn't gonna go in the direction of the engulfing candle. It's just a trap, right? The other thing is the market had recently popped up from this level. So even to see this closed below here, right? Because one of the things I'm like a contrarian trader where I'm saying, well, why didn't it? Right? Or why should it? This day was very bearish. And so why didn't it close below here? What made this candle close higher than this swing low? Okay. And so with that, again, this is when we have those fake engulfings and even here, right? So this was a fantastic day. I did a trade off of this day, but let's look at that as well. So it's like, well, why did that close exactly at this resistance level? The market had just closed from, just came from that level and fell down. And so in some cases, the Is this is like the perfect example of what I like to call a fake engulfing. Almost this, right? Almost this, but this did continue down. And I'm not saying that this won't continue down, but sometimes when it's more glaring like this, where there's a huge imbalance. Let's see if we can find. Let's see if we can find another one. And again, I mean, every trade is unique, so it's not always the case. But let's look at something like this, right? So this candle here, I'll put the vertical line on it so we can see it. And I'll just replay it really quick so we can go back to that day. We can see it play out. Okay, so with that day, let's start that real quick. So boom. Okay, so what and I'm saying this and sharing this because the engulfing candle pattern is it is one of the easiest patterns to trade. It's one of my favorite patterns, but I've also found in my experience and studies where there is a such thing called the fake engulfing. So we see a day like this, and my style of entry is an aggressive entry, and normally what happens is when for me. So my risk would have been to for the market to come down here. That would have been a 1 to 1. And so that's one way that I discount engulfing candles or fake engulfing candles is to look at the risk that I'll be taking. And I mean, even if I said, well, this day was very bearish, so let me get a stop in here, it's still not a uh, preferred trade. And so the point that I'm making with the fake engulfing is just noticing and paying attention to where the market closed, right? And so let's just say you were to say, okay, I'm gonna sell right there. And I think you might have gotten some pips, but yeah, so that just immediately turned around. But you'll notice how right here the market was resisted, and then it was supported, and then it popped up, came back down, and then these wicks in here are telling us a story. And so this day, being what I like to consider to be a fake engulfing, was just an instance of where those don't always mean that it's going to go down. Now, notice how this day closed below this level, right? It closed below the wicks barely by a couple pips, but then the next day pulled back a little bit and then it continued down. So this is another here pulling back to this wick and it closing below that might have been an indication that it's going to go down, right? So just one of the things I always say is just be cautious because even though the textbooks are like, oh, well, an engulfing candle, it's like you still have to qualify them and pay attention to how they show up and where they show up because just because it shows up on your chart trade to take at that time, right? So even in how we interpret it, right? So look at this. This is almost, well, the body engulfs the previous body. This was a gap down. And so to have a day like this, if I was brand new to trading, I might be like, oh, that's an engulfing candle right there. And then I'm going to buy. And then look at that, shoot, it went back down. And so I would say one of the things that I've benefited from in my studying is looking for fake engulfing candles to compare and contrast with what happens when you get a real engulfing candle, right? So let me see if we can find another fake one. Because notice how, like with this is a nice engulfing candle. The market had been going sideways. It closed below this level. Not at this point, I'm not sure why this level is here because we're going back in time. But let's just say you handle there's practically no wick, so that would have been a good day to take advantage of a sell. Let's see if we can find one. So again, my preference, I don't like to see them when they're too um it might depending on the direction of the market, right? Because this is actually not bad. And then it pulled back, right? But to have one like this, where the market is going up and then it pulled down, it did go down, but it's like the risk on this one is different from like entering when the market was making a pullback on its way up, right? So let's see if we can find just another one really quick for this. So this one is, and I started to notice with GBP USD specifically, I won't make this video much longer. I started to notice where the some days, and again, this is all with a grain of salt. Some days when we do have a trigger candle, then that next day sometimes will pull back just to relieve itself. But notice how this pullback here, even when it pulled back to the close of this candle, right? And so my style of entry, we could have got an entry right off of here. And even let's just say that that's one of the things. I mean, I used to get faked out a lot because I would think, ah, man, well, it's not going to go down because it reversed during this day. But noticing where this day closed might have given you more confidence to hold this trade because it closed below the the close of this candle. It pulled back off of that, right? So that was good. Yeah. Uh, but yeah, fake engulfing candles are weird. They're weird because okay, like this one. Yeah. Look at that one. Look at that. Let me not do that. Let me just expand it. A textbook definition. I'll put my we'll go back to that one. It's like a textbook definition of an engulfing candle, right? Look at that. It looks nice and juicy. And entering here, like it literally, this is a resistance level, right? Because this bullish candle in here closed below here, and then the next candle actually fell after this day probably tricked a lot of people, and then this market is going sideways a little bit, right? But it's so weird because you'll see something like this, and although the pop off of this support level was beautiful, let's see what happened the next day. And so you had this day go up a little bit, justified the buys, and I'm just gonna or to cut the candle sizes, cut the candle into threes or three parts into threes. Let me get that lined up. So one, okay, so that breached the middle third. Okay, let me just do this. Some of this may sound foreign, but as if you have any questions, feel free to leave those in the comment section. I'm happy to answer them. So this candle here closed in the lower third, and so that's a bearish indication that this market is going to reverse. And so if you hit sell right there, see where we are with that. Okay, so you'd be in profit, and then it gapped down, right? And so yeah, I would just say watch out and look at that. Look, it's so interesting. Watch out for those what I like to call fake engulfing candles, because that was two of them right there. I didn't even know that that one was coming up, but this one came up and then kind of did the same thing as this one did. But again, every moment in the market is unique. It's just paying attention to certain clues that the market is giving, almost like this. Yeah, it's like, oh boy, this looks like it's going up, but then the only thing is, this almost looks like a an evening star pattern, but this body is I like to see evening star patterns like a textbook evening star pattern, right? I like to see it when it's like a very technical when it comes to that. So, just a quick video thoughts on fake engulfing candles. Have you ever seen them? How do you know like how do you set up your expectations to say okay, well just because I saw an engulfing candle last time that doesn't always mean the same. If you like this video, feel free to follow me on here and boost this idea as well as leave a comment. I want to know your thoughts and understand how you've been dealing with your trading and what type of trading edges do you use. Like I said, engulfing candle is one of mine, and just really curious to see what you're doing to make your trading successful. So, till the next time, take care, trade safe. We will be looking at a beginner's guide to day trading online. by none other than Tony Turner. I was about to say Tina Turner, because hey, it's all the T Turners. We understand. Okay, I'm not go. Okay, we're not gonna do that in this video. Anyway, Tony Turner, Tina Turner, TL Turner. That's all. We all family. So this is a fantastic book, regardless of where you are in your trading journey. You could be brand new. You could be in the game for years, and you will definitely get major value. And so we're just gonna jump right into it. This isn't any sort of webinar where I'm going to make a offer at the end of this video to entice you to join my membership. That purely out of my passion and love for reading. Earlier, I heard the quote from one of my virtual mentors, Chris Gardner. He said that if you want to make the team, let's say you were trying out for a basketball team, he said if you want to make the team, you go to the gym. But if you want to own said team, then you go to the library. So that's what we're about to do. We're about to go to the library so we can own the team. Best-selling author of A Beginner's Guide to Day Trading. She also has a Beginner's Guide to Short-Term Trading, where she discusses being able to trade over 3 to 5 days. So one of the major reasons why I hope that if this is your first time coming across this book, congratulations to you, right? Because this book to me, even if you don't even have to read it all the way through, it's almost like, dare I say, a trading Helios Biblios. So let's get into it. Let's just dive in. I want to just kind of go through the content so that if you do have a physical copy of this book, I have a physical copy. Unfortunately, I don't have it in my immediate vicinity, so that's neither here nor there. I have the digital copy. Now, if you need the digital copy, I will be happy to point you in the direction of getting a copy of the digital copy. So you can send me an email and we can make that happen. Now, let's take a look. So, chapters, and even just going through the titles of these chapters, right? I just get excited. So let me just chill. Let me give me a little sip of my tea and then we'll get started here. So she's talking more about the benefits, kind of giving you just an overall backstory to trading. Chapter 2, Wall Street, a view from the top of a skyscraper. Day trading is your business. Let's set it up that way. Huge, huge. So, for the purposes of our series, we're going to primarily be focusing on chapter 4 and chapter 9. Okay, now we will be doing a little bit out of chapter 5, but primarily we will be looking at chapter 4. So, the winning market mentality that leads to profits. Let me get that highlight. For your notes that in this series of videos, we're going to be focusing on chapter 4, the winning market mentality that leads to profits. A little bit of chapter 5, which says trading fundamentals you'll build on. It's talking about the miracle of giving, so we'll talk a little bit about that. And then we will focus on chapter 9. So that's the plan. I know in the previous videos with the Art of War, there's so many principles. And like I said at the end of the Art of War video, even if this video just sparks an interest, like maybe you've never even heard of the Art of War or you've never even really thought about applying the Art of War to your trading psychology and the information that you've learned from the Art of War, And maybe in this video, if it just kind of sparks that idea, that's it. That's all we need. Okay, recommend purchasing a copy of this book. I will also have a link if you prefer to go through our affiliate. You don't pay more, nothing like that. It's simply just your your passive support for the channel, right? So we can continue making videos like this. All right. So why don't we just jump right in? No time to delay the information that we're going to go over. So let's go to technically 40. We'll just try 41 and see what happens. Yeah, that was far. So we just do 20 20. Okay, so that was accurate. All right. Even the chapter on day trading is your business, phenomenal, phenomenal. 10 out of 10. 10 out of 10. This entire book, 10 out of 10. And what I also love, let me actually, because I want to make sure I respect your time. So I am going to set 20-minute timers on each of these videos because if not, I'll get to talking and we'll be here for hours. So you'll see, but when we progress through the chapter, you'll see she has these small reality checks. At the end, she has these quizzes. She also has just these center points, so these statements of vision, thoughts to reflect on. All right. So let's go ahead and get started with chapter um, with chapter 4. Okay. So chapter 4, the winning market mentality that leads to profits. I was over here. It says experts say good sex is 10% in your body and 90% in your head. That sounds familiar. Believe it or not, good trading evolves from the same 90% mental discipline. Let me just zoom in because that's why I'm over here like going back and forth. So let me get that. Give me 1 second here. So yeah, we say that I say that on this channel all the time. Trading is 90% mental, 10% technical. I mean, it's not something that I made up. It's just something that to me I strongly believe. Okay, much better because I was about to be out here like auntie status with the blue light glasses on. So you can study charts and indicators until your eyes cross, but unless you develop a specific mindset that guides your trades, you'll be walking a tightrope without a safety net. To start with, let's establish two etched in stone rules to live by the rest of your trading life. Rule number one, protect your principal. That's rule number one, off rip. That's always the number one goal. If you have to hardwire any self paradigm or cybernetic, the first connection is protect your principal. That's first. Second rule, trade to trade well, not to make money. That's hard. The second rule, much harder. Well, both of them are equally hard, actually. So we'll continue. Do they sound too simple to be true? They're not. They're much easier promise than everything you learn in this book backs these two rules or imperatives. If you keep them uppermost in your mind and implement them into every trade, you you'll all, and this is gonna take a second. I don't know why it's doing this. Okay, interesting. Is that part of the book missing or what? See, this is why we just go live. I don't have to. Oh, that's right. Okay, so I guess maybe I just have to zoom out if that happens again. You'll all but guarantee a successful trading career. So, rule number one, protect your principal. Successful professionals and occupations all over the world use tools to accomplish their goals. As a successful trader, your tools consist of market knowledge, mental and emotional discipline, and your trading account. Protect the money in your trading account at all times. Don't abuse it, treat it carelessly, or allow others to take it from you. This money is your most cherished tool, and you must guide it with passion and commitment. Yeah, you're oversimplifying it. You're going overboard with your explanation. Am I really? I bet we both heard the same statistics. Between 80 and 90% of all traders crash and burn. As you read this, traders somewhere in the world are chasing a stock ignoring their stops, holding losers, over trading, taking home, buying in a downtrend. Translation: they're treating their precious tool, their trading capital, recklessly. I work with new traders every day who swear they protect their capital, in the next breath abuse it by jumping into a careless trade. They get caught up in the thrill of the moment, the excitement of a running stock, the euphoria of buying when everyone else does. We've all done it, and I've been there too. Even if you avoid all unnecessary risks, a percentage of your trades will lose money. Don't add to these by careless trades, or you'll wake up one morning with assets that total pocket change. True trading professionals who rake in profits of five, six, and even seven figures a year protect their accounts like a mother tiger protecting her cub. They trade cautiously as a routine business expense, and they don't compound them with losses due to carelessness. Jimmy Rogers, shrewd investor, frequent guest on CNBC, retiree and teacher at Columbia University Graduate School of Business, says in Jack D. Schweitzer's Market Wizards, which maybe perhaps that is on the list. Who knows? I wouldn't be able to tell you. Learn is to do nothing, absolutely nothing, unless there is something to do. I just wait until there is money lying in the corner, and all I have to do is go over there and pick it up. How simple, how beautiful. Rogers, like other financial giants, amassed a fortune by protecting his principal. He knows specific signposts that point to a high probability of success and has the mental and emotional control to wait until they appear. You most certainly will too. Let's talk about positive mental devices you can use to protect your capital. During the trading day, repeat to yourself over and over at all times, I protect my principal. Say it out loud. Don't just murmur it. Shout it with enthusiasm. Sounds crazy? That's fine. Try it. It works. Before you click the button, ask yourself, why am I entering this trade? Does my trade coincide with the present market trend? Do primary market indicators support my decision? Is my entry point technically perfect? Wow, beautiful question. We're going to dive into these questions. We're going to read through rule 1 and then we're going to pause, okay? So, asking yourself these questions. Do I have a rational thought out game plan? What is my exit price if my trade goes sour? What is my profit target if it performs well? All right. So we're going to go over here to, and the fourth is, what time of day is it? Oh, we need to ask that. Certain time slots during the trading day almost guarantee a trade's failure or success. You'll learn these time periods in chapter 5. With practice, you'll be able to answer the questions above in 5 seconds or less. If your answers are quick, concise, and positive, then the trade should be as close to a sure thing as possible. If you fumble or over justify one of the answers, reconsider placing the trade at all. Please take a personal oath right now to protect your principal. Print the rule and tape it to your monitor. Tape another copy to your bathroom mirror and your refrigerator door. Write it on the back of your hand. Whatever it takes to etch these words onto your brain and every fiber of your being. Treat your trading account as any professional treats his or her tools, with concern and respect. Protect your account at all times and don't expose it to carelessness or neglect. If you care for it properly, it will care for you and grow at the same time. Okay, she didn't say that, but she definitely said it will grow. Solution, right? Rule number 1: how do we etch this into our brain? Protect your principle. Successful professionals use tools. So what tools are you using in your trading right now, either to track your progress or to track your trades or to analyze your trades or to review what trades you've taken, or if just off just bare minimum, if you have the answers to these questions every single time you place a trade, where is that information go? Are you putting this information on a post-it note? Because is that professional? Why are we putting our goals on post-it notes? Please invest in a journal. Some sort of, you could invest in what's the I'm thinking about the digital journal. What is it? Remarkable. You can get you an iPad. Whatever is your fit or your speed of creating professional tools in your trading, do it now. What does that look like for you? For me, here, I'll go first. I like old school. I'm old school. I like journals. I should have been a journalist because I love writing, okay? That's just my passion. I love the pen on paper. I also love Excel. I love spreadsheets. So I have the desire to track both. I'm always tracking, I'm always reviewing, I'm always analyzing my own behavior. Who's going to do it? It's your business. Nobody's going to do this for you. And so often, sometimes what happens is traders will get trained and they'll learn all of this information and then they'll go to apply it. However, they may not have this piece that we're talking about, the piece of really treating it professionally. They don't have, it's maybe just one tool missing from the toolbox. They may have every single other tool, but they don't have the tool of treating trading like a profession. And so what happens is that they may have trades where they just carelessly jump in. That's what that looks like, right? She says they swear that they protect their capital. Let me see if I can highlight that because it's not not highlighting today. That's fine. Let me try this. Switch it off and then switch it back on. Sometimes you gotta reset. Perhaps perhaps it said I'm done with it. I don't. It's like I don't want to do it today. Which is fine. I respect. So they get caught up in the thrill of the moment, or they get a call or a text and people's like, "Hey, we're jumping into this trade," and they're like, "Okay," without having fully analyzed why. The first question, even the order of these questions, why am I entering this trade? Huh? Why? What is the reason? And I promise you, if you start asking yourself before you get into a trade, why am I entering this trade? You will enter less trades. Off rip, you're going to enter less trades. Why am I entering this trade? Does my trade, this coincide with the present market trend? What is the present market trend? You have to ask that question too. So you have to know, do primary market indicators support my decision? Does it support your decision? Well, you have to know what the primary market indicators are, right? And so all of these are just layered. Is my entry point, now this question I think is beautiful. Is my entry point technically correct? Wow, technically perfect as you can get your entry point. Is it that? If not, don't worry about it. That's a hard lesson. If after you say, "Oh, this looks good. The market looks good." You've already done your analysis, which I think number one, if you do number one well, you can pretty much answer the rest of the questions. Okay. So is my entry that throws if you say no to any of this or you don't have the information for any of this, the trade is not it's not valid until you provide this information. You don't even have a possible. Okay. You playing spades right now. You don't even have a possible. This is not even a possible unless you get a yes across all four of these areas. So is my entry point technically perfect? If it's not, why you're entering according to coinciding with present market. Okay. So uh, do I have a rational thought out game plan? What is my exit price if my trade goes sour? What is my profit target if it performs well? Yeah. Wow. I need to know all of this. I need to have a game plan. What is my exit strategy? Before I even exit, if this trade goes sour, I need to think about it in that process first because I need to know that there is a possibility that the trade could go sour. Some traders trade from this, it'll nothing will ever go wrong. And so when things do go wrong, they may not have the mental flexibility to navigate through the wrongness of what's happening. Okay? And so what is my exit price? If my performs well, you need to know this. That helps us to avoid greed and of euphoria. And then it also helps us to make a rational decision. Because here in rule two, where she talks about trading to trade well, taking reasonable profits. Okay, if you have a goal, and let's just use a nice even number. Let's say your goal was to make $1,000 today, and for whatever reason the market conditions present an $800 profit day for you. Will you take that? Well, you're 80% of the way to your goal. You run the risk of giving up that, right? And so it's these things that go into the decisions of, if you know what your profit target is, and you know when you get to a reasonable area, sometimes it's best to go ahead and just take that off the table. What time of day is it? You'd be surprised at how many times the answer to this question, a trade's failure or success. And so write it down, put it on your chart. Um, put this on a post-it note. Put those questions on the. You can put those questions on the post-it note. Don't put your answers on the post-it note, right? Just put those questions on there until, like she said, you'll be able to get to a point of where you can quickly answer. Speed isn't the goal right now. The goal is the process. The process is passing all of your trading ideas through this funnel of thought process. Why am I entering this trade? Right? I'm not going to go back through that. Feel free to re-watch the video so that you can grab the questions. This is your personal oath as a professional trader going forward. It doesn't matter what's happened up until this point. It doesn't matter how many times you've blown an account. It doesn't matter how many trading programs you've taken that you feel like maybe haven't benefited you. It doesn't matter if your confidence is swimmingly well. It doesn't matter. What matters right now is that you know that there is another level of success that you can achieve regardless of where you are. You could be a beginner, you could be a non beginner, you could be a novice, you could be an intermediary. It doesn't matter. If you're not doing these, if you're not doing this in your trading and you're already successful, man, it's only success that you can experience. And so um, just that first rule, it's like the one of my favorite movies is I, Robot, and how they have the laws hardwired into the robot. Like a robot may never kill a human being, right? And it's hardwired. This is your hardwired first rule of trading. Protect your principal. Okay? Protect it. Don't just throw it away. Don't just chase a stock. Don't just jump into a trade because your friend is saying, hey, this is the next trade. Don't let it beat you up. Don't enter trades that you don't have a plan for. All of these don't. Maybe we'll hop into some do's, right? But sometimes we need to know not to do so that we can create what to do. So do have a plan. Do know what time of day it is. Do know your profit target. Do know your exit strategy. Do know why you're entering the trade entry. All right. Let me check the time. I mean, because we can. You see, I don't have a script. We only have 2 minutes left. We only have 2 minutes. So what I want to do? No, I'm not gonna skip. I'm not gonna skip because I need us to read this in its entirety. I'm not gonna skip and do like we do in other teaching environments where we take a piece and be like, here you go. However, what I want to do is your takeaway for the week. And if you haven't guessed the major takeaway, it's most certainly getting these questions written down. I recommend, I'm not going to tell you what you need to do. I don't know you. Maybe you don't need to write these questions down. Okay. Maybe you do. Your choice. So I would recommend writing these questions down, typing them out, or these questions. And as you continue to evolve and continue to wrap your mind around what kind of trader you're becoming and how you see yourself 10 years from now, 20 years from now, how your accounts will look, all of those things, you will be able to answer these questions very quickly. Here's the reason why I know, and I guess I could. I'm not, and this is not because I'm like, I think I'm all of that, right? This is not, so maybe 10 years. Now, I'm not saying that I'm like a what Sister Rosetta Tharpe or anything like that. However, I can hold a good tune. Now, with some of the things that you learn on the guitar, you learn that the guitar is pattern oriented. Okay, so and I'm not here to teach you the guitar. Like, don't think that this is what this is. This is just literally me taking these last 2 minutes to prove this point. Speed, that didn't start off that fast, and I can go faster. But if you do it slow, so speed is not the goal. The goal is to be able to do it and to be able to do it consistently so that when you are in a position where you have to do it quick, you can just do it calmly. You're not like, you're not stressed out. Okay, the timer's off, so. All right. All right. So you learned something new about me. You learned that I've been playing the guitar for 10 years and almost, um, yeah. So that's the lesson for today. A beginner's guide to day trading. Hopefully, in that, there's something that you can take away. Mental devices you can use to protect your principle. Repeat to yourself over and over throughout the day. At all times, I protect my principle. At all times, I protect my principle. Before these four questions, we need to know the answers to as professional traders. All right. So again, I appreciate you for checking out this video. If you have any questions or if you want to reach out to me, all of my contact information will be in the description below. If you would like to learn more information about joining my membership, you can go to pipsovermoney.com. You can send me an email. You can also, if you would like, follow me on Instagram and TikTok. It is Pips Over Money as well. So until the next time, take care.